Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day. It's September 10th. September 9th, and we got a very light calendar today, and we'll start off with just the job openings for the month of July. So back in June, we had 5.32 million jobs out there, and it jumped up dramatically in the month of July. This is actually the most we've ever seen in job openings at 5.75 million. Now, this is, to me, I'm curious as to how many of these job openings are for part-time and full-time positions, as we still have a lot of people that are working part-time that would like to work full-time and don't have those full-time opportunities. So hopefully these are more full-time opportunities and get some of those people into more full-time positions that are working part-time so they can support their families. Unfortunately, I haven't seen or could find those type of numbers, but this is obviously a good start to where the economy is moving in job numbers. Now, we'll touch base on this in a minute here, but the stock market is up, but it was actually up a lot more, primarily because China, some good news that came out of China and Japan. So basically, China said they're going to speed up their tax reforms, increase infrastructure spending, and create some aid to economic growth. So, of course, yesterday we talked about how the stock market was taking off yesterday because they're in hopes that China would create some type of stimulus package. China answered that today by coming out with this information here. Japan also came out with their own, saying that they're going to make some tax cuts to try to create some stimulus in their economy. So overall, the markets were liking that a lot. And on top of that, the World Bank even came in on the heel of the IMF about a month ago, urging them not to raise their interest rates next week. So you got the World Bank stepping in and requesting that they don't raise their interest rates as well. Now, as I was saying before, they were up, but when we came out that job openings, the stock market pulled back a little bit. It's still up, but it did pull back from its highs so far this morning. As we talked about, the FOMC is meeting next week, and a lot of places around us are not doing so well. Geopolitically, the world on a global level is not doing so well, and there's concern obviously that there might be a recession, but going into recession. But on the U.S., we're showing two different things. We're showing jobs numbers to be improving, which could lead to the Fed raising rates. But on the other hand, we got inflation on the very low end of things. We're down to 1.2% year over year for the core inflation, which is extremely low, and that could only even make it go further down if we start raising rates. So there's kind of a conundrum as to which way to go, and right now all the investors in them are kind of scratching their heads which way the Fed's going to go. So it's not clear as to which direction they may go. Bond market today, we're actually down. So this is a concern we need, because now we have 3 days where we're down. And right now we're down below the 25-day moving average, which has been a good floor of support for us, but now we're below it. So we got to watch this carefully today if we close below it or if we can rise above it, as this has been a good floor of support. And if we don't hold this, we could potentially drop quite a bit more. All right, folks, so today rates were down about 15 basis points from where we left off yesterday, which translates to an increase in pricing. So rates are worsened today compared to where they were yesterday. All right, folks, you guys have a wonderful day. Thanks so much for watching, and we'll see you guys tomorrow. Take care.